Breaking IRS news. Tax treatment of NFTs for individuals and retirement accounts. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of Adam Talks. Got a great episode for you today because going into breaking IRS news on how they want to tax and treat the NFT from a tax standpoint. So this is super exciting. It's the first type of IRS guidance on how NFTs are going to be taxed. So on today's podcast, I'm going to focus on Notice 2023-27, which just was released March 21, 2023. Talk about what is an NFT, what's a collectible, and the impact this notice will have on individuals and retirement accounts. So even if you do not have an IRA or 401k, this podcast has significance for you because if you elected to purchase NFTs individually, there is a major impact if the underlying NFT asset is deemed a collectible. So before I get into everything, let's just discuss what the heck is an NFT, right? Because an NFT is a non-fungible token, and it's obviously a new and unique asset that is a byproduct of cryptocurrency and distributed ledger technology or blockchain. So it's exciting. There is an emerging NFT marketplace. I'm sure you heard all the stories, whether it's on my channel or through other sources of some of these NFTs during COVID going for millions and millions and millions of dollars, which are now worth a lot less. But nevertheless, it's still a very important piece of technology that will have significant ramifications from an investment standpoint and utility standpoint for all of us in the coming years. So let me just start with, what is an NFT? So according to the IRS, an NFT is a unique digital identifier that is recorded using blockchain technology and may be used to certify authenticity and ownership of an associated right or asset. Ownership of an NFT may provide the holder a right with respect to a digital file, such as a digital image, art, music, trading card, sports moment, or even a utility right, like a membership into a club or a right to a ticket. So it has a lot of different potential utilities. And that will impact whether the IRS treats the NFT as a collectible or not. So what are some of the more common types of NFTs? So I mentioned the art, the meme type images, photos, right? Whether it's Mona Lisa or LeBron James or some new type of artwork. Cards, right? Taking physical baseball, basketball, football, Pokemon cards, and then transforming ownership into a digital file. It could be a right to a gem, a right to a piece of gold, a right to real estate. It could be a right to eat at a certain restaurant, a right to a certain underlying asset. That is the excitement involved in NFTs. Some of the most exciting developments in the blockchain/crypto world are NFTs. Why? Because they have the most utility, right? We still haven't figured out a real utility for Bitcoin, Ethereum, or some of the other major cryptos, other than transferring funds back to, or remittance. If you are from the Philippines, working in the United States, Bitcoin is an easy, quick, cheap way to move money back to your home country versus the Western Union. So other than that, there's not a lot of utility as of today for Bitcoin, right? You're not going to go to CVS or Walgreens or Nike and use Bitcoin. You're just going to use Apple Pay or Venmo, Zelle, credit card, debit card, Visa, MasterCard. But with NFTs, from a utility standpoint, there is a lot of potential utility. It is a great way of confirming ownership, whether it's the tangible assets like real estate or intangible virtual real estate. And we'll get into how the IRS treats the digital file associated with the underlying asset. So before we get into how Notice 2023-27 examines what an NFT is from a tax standpoint, let's talk about what the IRS defines as a collectible. And this is important because it determines whether, from an individual standpoint, the underlying asset will have a heightened tax rate, which is 28% for collectibles versus 15 or 20% for non-collectibles. And obviously, from a retirement account standpoint, if you've watched my videos or listened to my podcast or read my blogs, you should know that an IRA or 401k is not allowed to invest in a collectible. And Internal Revenue Code, section 408M, defines what a collectible is. And essentially, a collectible is any work of art, antique, rug, stamp, gem, baseball card, and any tangible asset that is specified by Treasury. Okay, there is a specific exemption for IRS-approved precious metals and coins: pure gold, silver, palladium, bullion, 0.99% finesse, American Eagle, state minted, and bullion coins. Those must be held in the physical possession of a U.S. trustee, a depository, but they are not defined as collectibles, meaning they are permitted to be invested by a retirement account. Whereas a work of art, baseball card, antique, gem, rug, coin, beverage is not allowed to be invested by a retirement account because it's defined as a collectible. And by the same token, if you own it personally, subject to a heightened capital gains tax rate. So how does that apply to NFTs? So the interesting thing about Notice 23-27, and I want to give IRS full credit for this is essentially an introduction to their rationale. It's showing us, giving us a sneak peek into what they're thinking. Why? Because Notice 2023-27 isn't setting forth hard set rules and procedures for the tax treatment of NFTs. Instead, what it's doing is saying, hey, we need your help, general public. You, me, all of us. You have until June 19, 2023 to submit comments. And I'll go through some of the questions that they're requesting comments on. And I give them a lot of credit because NFTs are a new, unique, novel type of asset. And it's important that they get it right. You want to set forth very flexible, not rigid type tax rules so that these tax rules can not only apply to today's type of NFTs, but the future revisions of what an NFT is, because the concept of NFT will change over time with new types of technology and new types of assets. So I give them a lot of kudos for saying, okay, we think we have an idea, which I'll get to in a minute, for a very realistic test that will help all of us determine whether an NFT is a collectible or not. But before we set it down in black and white and put it in the tax code or set forth in a ruling notice, let's get your help. And then they can gather everyone's comments and then come back with a more formal set of rules. So essentially, this is how the IRS, as of today, has decided to look at NFTs. And just again, be clear, it's not the rule. It's a sneak peek into what the rule probably could be. So they center this around something called the look-through analysis. And the look-through analysis, which thankfully the IRS gives a couple examples of, basically says this. In determining whether an NFT is a collectible or not, we're going to look through the NFT, look through that digital file, and examine what the hard asset associated with that NFT is. So if you have an NFT that owns a ownership right into a gem or a piece of art, since that underlying asset is identified in section 408M as a collectible, the NFT is a collectible, right? So the look-through rules say, okay, we know the NFT is a digital file. It conveys ownership or certification or some right to this asset. Let's look what that asset is. If that asset is an asset identified in Internal Revenue Code section 408M, i.e. art, antique, gem, coin, beverage, or other tangible personal property specified by the Treasury, then the NFT is a collectible. On the flip side, the IRS gives a really helpful example of a situation where an NFT conveys a right to develop a plot of land in a virtual environment, right? Like virtual land in a video game or decentralized type situation. In that case, they said, since the NFT is associated or connected to a right of virtual land that is not identified in 408M, the NFT thereby is not a collectible. So that's the look-through analysis, which I think makes a lot of sense, which I think will solve 90+% of the issues, is to say, okay, we'll look at the NFT, we'll look what it conveys digitally, but we're also going to really focus from a look-through standpoint is what that underlying asset is. Is it something that's identified under 408M, like a piece of art, a baseball card? Or is it not, like a plot of land in a virtual environment? And essentially, that's what they're setting forth as the sneak peek into where they're going on this. Now, they haven't landed on it per se. They're still requesting comments from the general public, but this is a sneak peek into where they think they're heading. Now, the interesting thing about this example is the plot of land, the virtual real estate in the, I don't know, crypto tax type community has always been seen as gray. Is it a collectible? Is it not? How's it going to play out? And the fact they're saying, hey, because that virtual plot of land is not identified under 408M, it's not a collectible. And that's great because 408M, as I mentioned, only discusses very few types of tangible assets: art, antique, gem, coin, beverage, or any other tangible, not intangible, but tangible personal property specified by the IRS. So if the NFT is conveying rights to a non-tangible asset, could be good. And here's another important point. The IRS in the notice on footnote 4 says this: the Treasury Department and the IRS currently believe that digital files are not included under any of the categories listed in section 408M, such as rug, antique, metal, gem. So they're basically saying if you have a digital file, as of today, it's not a collectible. And I guess that is the whole purpose of today's notice, or the notice I'm discussing today, 2023-27, is to say, hey, we need guidance. Because right now, digital files are not covered by 408M. But the thing I really like about this notice, and I would rate this like an 8.5, 9 on 10, is the two examples. First, they give you the example of the gem, which you own a digital right to a gem. The gem is clearly outlined under 408M, thereby the NFT is deemed a collectible. And then they give you the example of the plot of land, the virtual plot of land, which is not identified under 408M. It's not a tangible piece of property, not a collectible. Can be purchased with a retirement account and subject to the regular capital gains regime. That's super exciting because now it's setting forth very, very clear and concise rules for how we can look at whether an NFT is a collectible or not. And the fact that they're saying digital virtual land is not a collectible, that opens up the door pretty far in terms of future types of digital assets that may be able to be purchased in a retirement account, and from an individual standpoint will not be treated as a collectible, which is super helpful. So again, this is a sneak peek. The notice is not setting forth concrete, hard set rules on the tax treatment of NFTs. It's giving us a sneak peek, and it's asking us for comment as from today until June 19th, 2023. And you should check out the notice if you're interested in giving comment. Just need to Google IRS Notice 2023-27. You can provide your comment. They have a website. You can submit it, or you can just mail it in. And they're asking for our help. So if you do have comments, feel free to submit them. You can also submit them to me, and I'm happy to submit them for you through our trade organization. It's up to you, but I think if you have something to share, something of interest that could help the IRS come to a more flexible and more accurate, realistic way of looking at how NFT should be taxed and setting forth a reliable test that we all could use very simply and easily, do it, right? You can do it anonymously. You don't have to put your name if you don't want to, but I think it's important. And again, you can do it through me. I'm happy to submit it anonymously for you, but I think it's important. So again, that is the breaking news is, hey, we're starting to get some guidance. It's not final, which is good. It's not rigid. The IRS is saying, hey, this is a unique new type of asset and we need your help. And again, I give them credit for asking for our help. We have the next several months to offer comment. And again, I encourage everyone to do so if you have something to add. But I do believe that the look-through analysis will be the foundation for a future test that the IRS and you and I will look to determine whether an NFT should be deemed a collectible and thus not be permitted to be invested by a retirement account and individually subject to a 28% capital gains tax rate. Last thing I want to say, what do you do now? Let's say you own an NFT now in an IRA or personally. What do you do? Well, I think you should look at the look-through analysis because the IRS is basically saying, hey, we're going with this. We just need a little bit more help, but we think we're going with this because they gave the examples. And I would say, listen, if it's a piece of art, baseball card, an image, a video clip of a basketball player, dribbling the ball or LeBron James slam dunking, probably going to be a collectible. And if it's in a retirement account now, probably want to sell it and move off from it. If you own it personally, you may want to sell it now before you get formal guidance, formal rules, so you can try to argue it's a capital asset, not a collectible. Whereas if you own a decentralized, virtual real estate asset, or maybe a utility type token that looks more like a right, a security right, an equity right, you probably are sitting pretty right now and saying, okay, probably gonna be good on this. Probably not gonna be deemed to own a collectible, so I'm gonna just wait patiently for guidance. And I would apply the look-through analysis and say, okay, is the NFT certifying or providing ownership of a 408M asset, art, gem, coin, beverage, antiques, rugs, stamps, or other tangible property, or is it not? And especially if it's conveying rights to a digital asset underneath the NFT, the notice is clear that 408M does not apply to digital files at this point. So again, I think you can sit pretty. The only issue is if the NFT is certifying ownership to a digital file, which is a piece of art, I think you're in trouble. But if it's certifying ownership in a digital file to virtual real estate, or maybe to a membership right, or to staking rights, or other rights, I think you're okay. I think you're probably not in the collectible world. Can't say for sure, but going off what is in Notice 2023-27, I think you're probably okay. So, kind of wraps up another Adam Talks. I hope you guys enjoyed it. This was a fun podcast. If you're watching on YouTube, thank you. Because, hey, we don't get breaking news every week, but we got something fun on NFTs, and I love NFTs. I mean, my kids own a couple NFTs. I didn't go crazy in 21, 22 on NFTs. My kids bought a few. They spent like under a few $100. They owned it personally, not in a retirement account. I was waiting for more guidance, waiting for the industry to mature, but it's here to stay. I mean, there's some really cool stuff going on in the NFT world. Musicians selling, NFTs to future royalties of future songs. You have artists, obviously athletes. So some really cool stuff going on. I've seen restaurants offer NFTs, digital rights to like certain reservations, fitness clubs, golf clubs. So I think that's something that is here to stay, and the IRS seems to realize that, which is the reason they're starting to issue. They issued Notice 2023-27, and obviously they want to get it right. So they're requesting comment up until June 19, 2023, which again, anyone that's interested, feel free to submit. There is information on the form, on the notice on where to submit, or you can submit through IRA Financial and we'll do it for you anonymously. Otherwise, appreciate you guys spending some time with me today. Have an amazing day. Subscribe, likes, please give me a like or a thumbs up, and leave a comment. If you have questions, happy to answer them. I do my best to go through all comments on a daily basis. So otherwise, cheers. Have a great rest of your day, and see everyone again next week.